but tonight and for the rest of this month, we're going to be mainly talking about Nadex binaries. So tonight it's going to be pretty basic. Tonight we're going to cover the basics of a Nadex binary, Binaries 101, for a lot of the new people that have come on with us. Some of you experienced people, this may be repetitive for you, and you might have heard and know all this, but always good to review the basics no matter how much you think you know them. And we always try to review the basics every so often here for the new people. Ken, you asked, will we provide the spreads video? Yes, a couple things here. This particular video and all of our videos that we do here on Monday nights, if you go to the website, go to apexinvesting.com, okay, and right here under the questions tab, you will see the trading questions forum. And then if we go there, right down here under the general trading forum, you'll see Apex webinars and newest webinars. Okay, so anytime we do a webinar here at Apex, whether it's the Monday night webinars we do, for educational information on Nadex, or a Thursday here at Apex, we do a Thursday afternoon now webinar every week. All of our webinars are always put right here under most recent webinars. Okay, and you can see the whole list of them here. Last Monday we did how to hedge futures and Forex with Nadex spreads. Before that, trend trading with Nadex spreads. We go a little further back here, mastering Nadex spreads, proximity, and common misconceptions. And then I believe we did where is it here? Nadex spreads made easy. Okay, Ken, you were asking about spread videos. There's a whole bunch of them for you right there. Starting off, you go 4 weeks back, starting off with basically the basics of a spread, how they work, then get into how you can use them for trend trading, hedging, all kind of stuff. All right, so that's where you can find all the videos we did last month for the Nadex education videos, and those are all on spreads. You can go back here and you see all kind of videos we got in here. This video we're doing tonight is being recorded, and it will be uploaded to the same place. All right, so just once again, for any of those of you that came in late, where will this video be recorded and any other webinars we do? Under the questions tab, trading questions forum, and under the general trading forum is right here, Apex webinars, newest webinars. So that's where it will be recorded. If you're not familiar with Apex Investing, we're an approved educator for Nadex. We do webinars with them all the time. We have a lot of free education here on our site. Feel free to go to apexinvesting.com, sign up for a free membership, and you'll have access to literally tons and tons of information. Again, under the questions tab, under the questions forum there's all kind of information in the forum about systems, strategies, and so on. Again, all the recent webinars there as well. We put the newest webinars on that link there, but then after a certain amount of time, we'll put them in a different section. You go over here to the education tab and go down here to Nadex tutorials, and let me downsize my screen here so you can see what I'm looking at. You can go to education right here, Nadex tutorials, getting started with Nadex, Nadex platform, Nadex spreads, Nadex binaries. You can click on one of those and it will give you a lot more information. Okay, it'll give you the option of a bunch of different videos we've done, Nadex spreads, why trade spreads, introduction to spreads, and you just click the scroller and it'll go on and on and on, and you'll have a bunch of information you can watch there. It's all free to watch. Sign up, make a free username and password, get access to literally hundreds of hours of education on Nadex, on spreads, binaries, strategy systems, how to use the platform. If you're brand new and looking for some free education, that's the place to be right there. Okay. Also, if you're brand new to Nadex, you want to make sure that you do hop over to the Nadex website. Most of you probably already have this. Go right here to trading and demo trading platform, and you can open up a free demo account. All right, it'll take you just a minute or two to do. You just got to type in your name, make a username, put your email in. They'll open you up a Nadex demo trading account with $25,000 of funny money to play with. That way you can get a hang of the Nadex platform, how to use it, how to submit orders, how to practice your strategies or systems. It's taking a minute to come up here. Looks like I've got probably too many things open here. But make sure that you use your demo account, and anytime you're coming up with a new system or strategy or just learning something new, I've got quite a few of you telling me here in the chat that you're brand new to binary options, not familiar with them. That's why you want to definitely have a demo account. All right, that way you can test it out and play with a demo account, not use your live money or risk your live money trying out something new or something that you're not familiar with. Okay, so let's just get strolling here. Let's start off with our standard disclosures here. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Recommend that you seek independent advice before making any decisions. The information and strategies contained here on this webinar are the property of Apex Investment Institute and are not to be shared or distributed. Again, futures and options and risk involve trading. Any trading decision is your sole responsibility. Any information here on this webinar tonight is for informational and training purposes only, educational purposes, not a solicitation of an offer to buy or sell any particular financial instrument on Nadex. And as always, past performance is not indicative of future results. So, again, hop over to nadex.com, open a Nadex demo account if you don't have one already, and visit us at apexinvesting.com to learn more about how to trade on Nadex. So again, tonight, Binaries 101. What is a Nadex binary? What is the value of a Nadex binary? What markets can I trade? How to place orders? Getting started? How do they work? All right, again, we're going to cover the basics here tonight. Most of your questions will be answered as we go through here. We're covering the basics, but if you have a question, go ahead and pop it in the box. I may be able to stop along the way and answer them as we go. Otherwise, at the end, I'll make sure to go back and make sure we have them all answered. But most of them will be answered here as we go. So, Nadex binaries. What are they? How do they work? How can I trade them? First of all, the benefits of a Nadex binary. The Nadex binary, you've got no stop outs, no whipsaws. It's limited defined risk, known before your entry. It's not like trading, spot Forex or futures where the market can shoot up and go against you, hundreds of points, and can blow through, your stops, blow through your whole account. With Nadex binaries, you know exactly what you're risking before you enter the trade. In fact, it actually tells you on your order ticket, and you cannot lose more than your defined risk that's listed on the order ticket. Your maximum risk is your margin. Your maximum risk is the amount that you're putting up to enter that binary trade. All right, there's no margin calls. You've got low margin requirements. You could do one contract, 5, 10, or hundreds. Okay. So what are binary options? They're short-term, fast-moving contracts with only two possible outcomes: at expiration or settlement. So at expiration or settlement of the contract, that binary is either going to be worth 0 or 100 at expiration. Okay, basically it's a binary. It's yes or no, 0 or 1, true or false. It's a yes or no statement. Either the event did happen or it did not happen. You can hold the binary until expiration, or you can exit before expiration. All right, you may get in you may buy a binary and it's going in your direction and you're profitable and you want to get out early, take some profit early. You can do that. You don't have to hold it all the way till the end. All right, or you might get in and it's going against you, going the opposite way, and instead of taking your max loss on it, you want to get out early. You can do that, and we'll review that a little bit here. Dramatic changes in the value regardless of market volatility. What that means is, with binary options, you don't always have to have a big move in the market or a big trending day in the market to potentially be profitable on a binary option. Okay, it can be traded in volatile markets, it can be traded in flat markets. That's just the basics of how a binary works. All right, and there's various systems that you can strategies you can use for both. Okay, so like I said, even if it's not volatile, it allows you to leverage the volatility of Nadex binaries itself for a potential high percentage capped return on small investments, even if the market's not moving. All right, and you can have a high probability for these capped returns on modern investments in short time frames without having uncapped risk like many traditional markets. And I'll show you exactly what I mean by that. Okay, Frank, you're asking, are we going to provide some trading strategies as well? Tonight's webinar is just the basics of binaries. So to understand what is a binary, how do they work, how are they priced. Over the next few weeks, though, we are going to be on our Monday night webinars talking about various different market, about various different binary strategies. We're going to be talking about trend trading, scalping, reversal trading. Nadex also has, you might be familiar with the 20-minute binaries and the 5-minute binaries. We're going to be showing and talking about exact systems and strategies we use for those. So if you join us on the rest of the webinars here the rest of the month, we will be discussing strategies and systems. Otherwise, like I showed earlier, you can hop over to apexinvesting.com, go through all those videos, step-by-step trading courses about multiple strategies and systems for binaries and spreads. Okay. So risk and reward. Like I said, limited risk on binaries. The floor of 0 capture risk of a long position and the profit of a short position. The ceiling of 100 caps the risk of short positions and the profit of a long position. That may sound confusing, but I'm going to show you some visual examples here in just a second. Okay, so it's a small contract size. You never risk more than $100 per contract. All right, now you can do multiple contracts, you can do all you want, but again, at settlement, at the cash value of the option, there's also no delivery of physicals such as stock certificates. So if you're trading a binary option on one of the U.S. indices, you're just trading the binary option of that indice. There's no actual delivery of a physical stock certificate, or if you're doing a binary on, say, gold or oil or silver, a commodity, you're not going to have to actually take possession of an actual physical commodity. All right, no one's going to be showing up at your house with a bunch of barrels of oil there. All right, so let's look at this visually. Risk reward. All right, so a risk reward on a long position. All right, if we buy one Nadex binary at $25, all right, remember we talked about at expiration, we got 0 or 100. That's how binary works. At expiration, it's either worth 0 or 100. So let's say you buy a Nadex binary at $25. Okay, your maximum risk is $25. All right, so if you're buying a Nadex binary, if you're buying, going long, that means you think the market is going to go up. Okay, so you're buying a binary for $25, and let's say you're right and the market went up and it expired in the money. We'll talk about what that means. It expires with the statement being true, then that binary is worth $100 at expiration. So your maximum reward was $75. All right, so you bought it for $25, you were right, expired for $100, so your max profit was $75. The amount you buy a binary for is the amount of the risk. Okay, so if you bought it for $25 and you were wrong, then that was your risk. That was the amount that you would lose, would be $25. So the risk is the amount of money you're putting up to place the trade. The difference between where you bought the binary and $100 is the maximum you can make. Okay, does that make sense to everybody? That's on a long position. Okay, so let's just look again here. If we buy a binary for $75, now our maximum risk is what? Remember, the risk of a binary is the amount that you bought it for. So the example a second ago, all right, was us buying it for $25. Okay, so that was our max risk, $25. So if we buy one for $75, what's our max risk now? Right, exactly, Brad. Now it's $75. So depending on where the market is and where binaries are priced at, and you normally have multiple binary contracts available. You don't have just one normally, okay? You have multiple binary contracts available. You might be able to buy one at 25 or one at 50 or 75. We'll get into some examples there. But wherever you buy the binary for, let's say in this scenario here we bought for 75. Our risk is $75. Our maximum reward is $25 because at expiration, the max it can be worth is 100. Okay. Somebody asked here, well, why at the $100, Rob? Well, because at expiration, that's what a binary is worth. Okay, is a max of $100. At expiration is either worth 0 or 100. Okay, doesn't go past $100. Doug, is the price based on the length of the contract? The price is yes and no. Some of the longer term contracts will move a little bit slower, and we'll kind of show you some examples of that. But it's more priced on at where the market is in comparison to the binary contract itself. I'll give you an example of that. It'll make sense here in a second. Okay, Mohammed, you're asking, so would you make $25 at the close? Well, if you bought this binary for $75 and it expired in the money, which means expired correct, all right, it won, you were correct, then yes, you would make $25. Okay, if you bought it for $75 and it went the other way, went against you, and instead of getting out, you held it all the way to expiration, then it would be worth 0. Okay, so your max risk and loss there in that case would have been 75. Okay, so now we're going to turn this around. That's if you were buying a binary. Now, if you were going short and selling a binary, okay, we're still dealing with the same parameters of 0 or 100 at expiration. So if we sell one Nadex binary for $75, our maximum risk is $25. Okay, because we're going the opposite way now. Okay, a second ago, if we bought one for $75, that was our risk. Now, if we sold one for $75, our risk is only $25, because the amount you sell a binary for is the maximum you can make. All right, the difference between what you sell the binary for and $100 is the amount at risk. So right here, if I'm selling a binary for $75 and it goes against me, well, all I can lose is the difference from 75 to 100. All right, so 25. My maximum, or I'm sorry, I think I confused you there and said that backwards there. If I'm selling it for 25, or I'm selling it for 75, my max risk is 25, and my max reward is 75. So if I'm selling it, I'm saying that the market's going to go down. I'm saying that statement is false. So if I sell it for 75 and I am correct and I win, the market goes down, then I have a $75 profit reward potential. If I'm wrong, my risk is the $25 I put up. Okay, the difference of 100 to 75. All right, this will take you a minute to wrap your head around it because it's the opposite of buying. So let's look at another example. If we sold a Nadex binary at 50, again, at expiration, worth 0 or 100. So if I'm selling it for 50, my max reward would be 50, and my maximum risk would be 50. Okay? Going right in the middle there. So let's take a look here at an example. All right? This is an example of an actual ticket on Nadex. Okay? And when I talked about in the money or, the statement being true or false, what does that mean? Here's what it means. Here's an example of a Nadex binary contract. Okay, so this is saying for the euro dollar to be above 1.0 1.3960 at 3 p.m. Okay, so do I think the euro dollar is going to be above or below 1.3960 by 3 p.m.? Now, I might be getting into this contract at 2:55 p.m. I might be getting into this contract at 11 a.m. in the morning. It just depends. Okay, and based on my system or strategy, I'm going to be looking for the market to either be above or below that. So let's look at an example. So for the euro dollar, what we're saying is that by 3 p.m., okay, the euro dollar would be above 39.60. Okay. Now, right now, the euro dollar is trading at 39.85. So that means the statement is already true, correct? Because right now, the market is already above 39.60. It's at 39.85. So what I'm saying is that I think the market will stay above 39.60. So the market can go up, it can stay right where it's at 39.85, or it can even go down a little bit. But as long as it doesn't go below 39.60, then I would still be in the money. Yes, Leon, exactly. So it's in the money. This is what's called an in the money binary. It's already in the money. The statement's already true. Okay? So I can buy this Nadex binary for $85 in this example. Okay? Now, what you have right here is what's called a bid and offer. All right? What this is saying is I can buy this binary for 85, or I can sell this binary for 79. So if I think the market's going to stay above 39.60, I'll want to buy this contract. If I think the market's going to go down by 3 p.m., then I would want to sell that market. Okay? So what we're looking at here, and not to confuse you here, but that is a bid and offer. All right? That's the market maker's spread there. Okay? It's a market maker saying, I'll buy it for this, I'll sell it for this. Okay? So if you want to look at this from a percentage or probability standpoint, that's what this means right here, the midpoint. All right, so we've got 85 plus 79, which is the bid and offer, equals $164 divided by 2, it's $82. That's the midpoint. That price point tells us at this second in time that it believes there's an 82% chance that this binary will close above 1.3960 at expiration. So if we buy it for $85 and the euro dollar closes above 39.60 by 3 p.m., then the binary will close at $100. So our max reward is $15. All right, everybody follow me there? We bought it for 85. It expires in the money above 39.60. It'll be worth $100. So we made $85. If the event does not happen, then the binary will close at 0, and our maximum loss would be $85. Okay? Now, yes, you can exit early if you see the market's going down against you. You bought it at 85, maybe it's down at $50 or $60 and you just want to get out. You can do that. You don't have to hold it off. Okay? You don't have to hold it all the way till expiration. All right? You can get out early. So, if the event does not happen, the binary closes at 0, max loss is $85. Now, like I just said, in addition, we can potentially close the position previous to expiration, while the option's still trading, to either have a smaller reward or a smaller risk. Right? You buy it for $85. Say market's going up, it gets up to 95. You say, I just want to close it now for $10 profit. You can do that. If you buy it at $85, the market's going down, now it's at 50. You want to close out early to limit your loss, you could do that as well. Okay? So, just to put this back into perspective, and again, this recording will be uploaded so you can watch this again. The risk when you sell and the risk when you buy. Okay? Let's just cover that one more time here. Got a question or two here. Mohammed, yes, if you bought something for 62 and it went against you and you did not close out early, then yes, you would lose 62. When you buy Your risk is whatever amount you buy for. Okay? When you sell, your risk is the difference of where you sold compared to 100 bucks. Okay, so Leon says if I buy at 60, can I put in a sell at 70? Yes, you can. Yes, you can. You can do that right away, exactly. Actually, Leon, yeah, let's say you bought something for 50 bucks. Okay, you can go right in and immediately put a take profit order. Okay, say I buy it for 50 bucks, I go in and I put a take profit order at 70 bucks. So that way if the market moves up, it's going in my favor, going in my direction, boom, and get me out at 20 bucks profit. You know, say you want to scalp it. All right, you can do that. All right, so let's look at a different example here. Same thing, we're on a Nadex ticket. We're looking at the same contract. All right, or well, I think a little bit different price contract. Euro dollar to be above 39.60 by 3 p.m. and it is currently trading at 39.87. Okay, so again, right now this contract is technically in the money on the buy side. But let's say we want to sell it. Let's say that, hey, the contract's at 39.60. The market right now is 39.87. So the market is above the strike price. But I think the market's going to go down. Or I see on my strategy or system it's already going down. And I think by 3 o'clock it's going to be below 39.60. So we can sell one Nadex binary, 39.60 strike price. We can sell it for right here, $82. Okay, so if we sell it at $82 and the euro dollar closes below 39.60, our max profit is $82. Okay, because when you're selling, your max profit potential, your max reward is the amount you sell for. Okay, now your risk would be what? $18. And notice, guys, it tells you right here on your ticket when you enter a ticket. If you enter a sell quantity of 1, you want to sell for 82, it'll tell you right there. Your max profit's 82, your max loss 18. So sometimes people get confused here about, wait a minute, when I'm buying, my reward is, or when I'm buying, my risk is what I buy for, but when I sell it, wait, what is it? Well, you'll get it in time, but if you ever have a question about it, it's listed for you right there on the ticket before you ever place an order. Whether you're buying or selling, whatever direction, it'll tell you right there, risk and reward. Okay? So yes, Tom, buy equals true, sell equals false. That is a way to look at it. Yes, absolutely. What you're saying is the euro dollar to be greater than 39.60 at 3 p.m. Will it be? Will that be true? Will that happen? I think it will. I say yes, it will, so I'm going to buy. I don't think it will. I think it's going to be lower than that, so I'm going to sell. So yes. Okay? So yes, Mohammed, if we took this actual trade here, if we sold this contract for 82, and by 3 p.m. the market was still above 39.60, so we were wrong, then yes, your maximum loss right there, 18 bucks. If you're correct, the market did go down, max profit, 82 bucks. Absolutely. Okay. Clarence, this is a live webinar. All right, we are recording the webinar, and I'll show you again at the end where this recording will be if you want to go back and watch it anytime. But yes, this is a live webinar here. Okay. All right. So once again, and you'll see the opposite right here. See, on this ticket here, we've got it filled out as a buy. So again, it shows you. So you want to buy. This example, max profit 15, max loss 85. Okay, so just again, remember, if we use this number of 75, if we sell something at 75, that means our risk is only $25 and our reward is 75. If we buy at 75, our risk is 75 and the profit potential of 100. Okay. So, yes, JP, I'll get into that here in just a second. So binary contracts. What markets can I trade binaries on with Nadex? You can trade stock index futures on the US. We have some U.S. indices. We've got some overseas indices with Nadex. We've got spot Forex, commodities futures, and economic events. All right. So for stock indexes, for the U.S., we've got the Wall Street 30, which is the E-mini Dow, the U.S. 500, which is the E-mini S&P, got the U.S. Tech 100, which is the NASDAQ 100, U.S. Small Caps, which is the E-mini Russell. For European sessions, we've got the FTSE 100 and the Germany 30. Okay. At nighttime, we do have the Asian markets. We've got the Nikkei, however you want to say it, Japan 225. All right. So those are the different stock indexes that Nadex does offer binaries on. As far as the commodity markets, energies, we've got oil and natural gas. For metals, we've got gold, silver, copper. On the ags, we've got corn and soybeans. For spot Forex, we've got 10 different FX pairs right now that you can trade Nadex binaries on. Aussie dollar, Aussie yen, euro dollar, euro pound, euro yen, pound dollar, dollar franc, dollar yen, and dollar CAD. You can also trade binaries on economic events, on economic news that comes out, forecast news that's coming out with certain numbers, the federal funds rate, or the target Fed funds rate, jobless claims, and non-farm payrolls as well. Okay, and guys, all of this is on the Nadex website. I'll show you how to find some of that. In fact, let me just pull that over here. If you go to the Nadex website, earlier, guys, we were talking about signing up for a demo. Go to demo trading platform right here. Just pick a username, fill out your first and last name, phone number and email address, apply for demo. Boom. They'll open up a $25,000 demo account for you that you can start playing with. Okay. Right here under markets, you can go to if you want to see stock indexes, and right here contract specs, and right here it'll show you all the ones I just listed. Wall Street 30, US 500, and it shows you everything. They've got 20-minute binaries expiring at these days and times. Here's the number of strikes, number of contracts, intraday, 2-hour, daily, weekly. You can see all the information about all that right there on the Nadex website. Okay, and we'll go back to that here a little bit more in just a second. Let's see here. All right, Hugo. Well, that's a good question there. Let's talk about that right now. Let's see here. Expirations. All right, Hugo asked, what is the latest point I can sell before a trade closes if I see the market going against me? Okay. Well, there's multiple different binary expirations out there. Okay. For example, right now on 4 of the different FX pairs, there are 5-minute binaries, which means there are binaries that expire literally every 5 minutes. Okay, you can get into them every 5 minutes, 23 hours a day. On the 4 U.S. indices, there are 20-minute binaries from 10 a.m. to 4 p.m. Eastern. They expire every 20 minutes. We've got intraday, which basically expire every hour on the hour during those trading hours. Got daily expirations, which are the end of the current trading day, and then weekly. Okay. Now, with Nadex binaries, right at the end of expiration, 2 minutes before, well, okay, on 5-minute binaries, 30 seconds before they close. All right, so let's say there's a binary that's going to close at, let's see if I can just pull one up for you here. Hugo, let me see if I can just pull up here. I've got a demo account open right here. Here's some 5-minute binaries on, let's just pull up the dollar yen. Okay. Here's the binaries we got right now on the dollar yen. Okay, you'll see here there's a bid and offer. All right, so we've got this one here, 120.14 and 120.11. All right, those are the strike prices. Okay, you've got a bid and offer. See right here, time left to expiration, 2 minutes. When there's about 30 seconds left to expiration, the market makers will not be quoting here. All right, just because the market can move real fast at the end there. It's what we call the dark zone. Okay, on intraday and hourly expirations, that dark zone is normally the last 2 minutes. So during the last 2 minutes, or for a 5-minute binary, in the last 30 seconds, the market makers will not be quoting. The only people quoting would maybe another trader who might be, buying or selling. So what's the latest point you can sell before a trade closes? Well, as long as there's a quote there, you can get out of it at any time, Hugo. All right. But what we always suggest is keep those dark zones in mind. If you're doing a 5-minute binary and you've only got about 45 seconds to go and you see it going against you, you probably want to go ahead and get out of it there, because you might not be able to get out of it those last 30 seconds. Or if it's an intraday contract, you see it going against you, you might want to get out of it before those last 2 minutes in that dark zone, because there may not be a bid out there. All right, let's say you bought a contract and you want to sell it. You need to see a bid over here what you can sell it for. Okay, does that make sense? Hugo, does that help at all? Okay, let's see here. Damon, no, Nadex does not display penny stocks, just those markets that we just covered there. Okay, and yes, Nadex is simply the means for placing orders. They are the platform. They are not trading against you. They are not taking the other side of your trades. Guys, see what I was talking about right there? See, there's only 11 seconds, 10 seconds. See, there's no quotes here. All right, that's those last few seconds of dark zone. Now the next 5-minute contracts are about to come out, and you'll see those pop up here. Give just a second. Boom, and there they are. Okay, so every 5 minutes there. Okay. Doug, yes. Yes, exactly. It's exactly how they're priced. Yes. Okay. Rob, why are some of my orders not getting filled? I'd have to know a little bit more to help you out with that question, or maybe some examples. Feel free, if you have an example, let me know. Otherwise, feel free to hop over to Apex Investing, and you can submit a help desk ticket over there. If you have some copies of a trade or a chart, we can definitely look into that and help you understand why that may be. Why would an order not be filled? Well, for a couple of reasons. There may not, for one, just because you may want the market to go up to a certain price and fill, doesn't mean the market will. The market may not move. Okay, the market may not move in that direction to get to that price to fill your order, whatever you've put that order at. Or you may be trying to get out of an order. Maybe you bought and now you want to sell and get out of it, but there's no one on the other side to take that. There's not a bid at the price you want to be able to sell out of that market. Okay. The other thing that may happen is you may open up an order just like this and say, okay, yeah, I think I want to go ahead and buy that or sell that, and you click a quantity and you just press OK. All right, cool. It filled that order, but that was a bad example. What I'm trying to show you here is, see how you've got, I clicked $24, so I put 24 right there. Okay. And now I'm ready to place it, but look, now the market's different. Now it's 24.75, now it's 24, now it's, okay. Well, anytime you place an order on Nadex, it's a limit order. You might have tried to get into an order and the market's going down. Okay. So right here, I say I want to buy it for 24, so I press submit. Okay. And let's see here, where are we at now? I'll put that in there at 22. Let's just say I put in here that I want to buy it for 30. Okay. Well, it's going to fill me for 30 or less. Is the market less right now? Yes. So it's going to fill me right away. Okay. But what if I say I want to buy it for 10? Okay. Well, let me put a quantity in there. Well, I want to buy it for 10. Well, notice it did not fill that order. Okay, if I go right here to working orders, see it, it's sitting in working orders. Okay, because when I put it in that I wanted to buy it at 10, the market was at 17. It hadn't gone down to 10 yet. Now it did go down to 10, and it filled it. All right, so again, Rob, why are some of your orders not getting filled? I need to know a little more to answer that, but those are some of the reasons right there. Could be that there's just no one on the other side, or the market's moving a little faster compared to what you're entering the order price at. Okay. Let's see here. Okay, expirations. Expirations and settlements. Kind of went through some of those. We got 5-minute binaries, 20-minute binaries, daily, weekly. You got the days of expiration. Time of expirations are always quoted in Eastern time. Okay. Strike with, what does that mean? That means, let me just give you an example here. Let's pull up, let's look at something a little different. Let's look at the indices for tomorrow's daily. Okay. These are all the different strikes. 2085, 2088, 2091. Okay. And what you'll always have is, right now the market's at 2113. See that? And this binary is at 2112. So that binary right there is the closest one to the current underlying. All right, so that's what we call at the money, meaning the market is at close to at the strike right now. So when Nadex quotes the different binary strikes, you're going to have an at the money strike, and then you're going to have strikes below it and above it. Okay, and you'll see they go from $7, $11, $16, all the way up to $99. All right, so that's why we gave a few of the different examples earlier. We gave an example of buying for around 25, or an example of buying around 75. All depends on what binary strike you go with, depending on the time and your strategy and system there. Okay. All right, so that's what we mean by number. Okay, number of contracts. Again, let me just keep this open here for a second. How many contracts are there? Right here, there's 200 of this one, 200 of this one. There's different strikes. This one only has 10. Okay, you can see all this right on the Nadex platform. I'll show you the strikes, what the strike is, when they expire, the time left to expiration, the date they're going to expire, the number of contracts, and the prices. Okay. Doug, the Greeks are built in to binaries. All right, the closer you get to expiration, that is when some of those Greeks will come into play with some of your, delta starting to move faster as you're getting towards at the money and your gamma and you're moving closer to expiration. But that's all built into the pricing of the binaries. Okay. Leon, so it's 3 ticks apart. That was just an example. All the markets are different. And some of the expirations are different. Okay, what do I mean by that? Let's look here at Forex binaries. I'm going to pull up the euro dollar. You see right here, what do we have? We've got different expiration times. So on the euro dollar right now, we've got a contract that goes from 6 p.m. to 8 p.m. Eastern, one that's open 7 to 9 p.m. And then some that expire here tonight at 11 p.m. Okay, so like these here are 4 ticks wide. Okay, see that? So these intraday ones every 2 hours, Leon, you see that? Those are 4 ticks wide. But then right here, if I click one of these dailies at 11 p.m., those are 20 ticks wide. Okay, or if we go to 5-minute binaries and pull up euro dollar, those are 3 ticks wide. Okay, so they're all a little different depending on which expiration time you use. Did that clear it up a little bit, Leon? Okay, cool. Let's see here. Okay, so when you're buying, all right, when you're buying, you're saying it has to be above. It has to be this or above. Okay? Or above this price. When you're selling, it's going to be that or below. Okay, Stephen? Yes, Rizio, all trades are based on Eastern time. Everything listed on the Nadex site here is Eastern time. Okay. All right, let's move forward here a little bit. So, flat, trending, or choppy markets can trade all three. Let me give you an idea of how the pricing works here. Okay, this can be a little confusing, but this will clear it up for you. Let's look at the euro dollar. Let's say the contract was the 1.2540 at 3 p.m. Okay, and so let's say that I'm planning on buying this contract. All right, see this green line? This green line is 1.2540. That's the strike price of this binary contract. So, what that statement is saying is if I buy it, I think that at expiration over here at 3 p.m., I think the market will be above 2540. So right now, let's say I get in here, the market right now, in this example, you see the red circle, is already above 2540. So the statement's already true. It's already in the money. It's already a true statement. It's above 2540. So let's say I buy in right here, and I can either sell it for 54 or I can buy it for 58. All right, just like on the ticket. Okay, so say I buy it for 58. Well, then what happens? The market comes down, and it gets to 2540. It keeps going down. Now, let's say that binary I'm in is now quoting 42 or 46. So I bought it for 58 when it was up here and already a true statement. Now, a little while later, it's gone down against me, and it's down at 42, 46. I'm down a little bit, right? So it's going along, we're getting closer to expiration, we're still down here, and we're getting closer to expiration. Now it's down to only 34 or 38, okay? But then the market starts to come back up, and then it comes back up here. Now it's worth 72 or 76, and it comes back down. Now I'm way down here at 22 or 26, but then the market pops back up, and at 3 o'clock, it's above 2540 and expires at 100 bucks. Okay, so I bought it. Let's say I bought it right here for 58. Okay, now this is just an example. Let's say I bought it for 58, but then at expiration, it expired in the money. Statement was true, so it's worth 100. All right, so I made $42 of profit there, right? Okay, but what I want to show you here is the closer that you get to expiration, the more volatile your pricing will start to move, okay? Because you don't have as much time left, all right? And what I mean by that is right here. See right here was worth 54 and 58, but over here it's 72 or 76. Well, they're close to the same level above the market. Why is there such a big difference in price? Well, because over here I'm a lot closer to expiration. Okay, so there's a little more premium built in, a little higher price there, because as of this point, there's not a lot of time to expiration. We're in the money, we're above the strike price. So it's getting closer and closer to the $100. Okay, now the opposite side. Remember down here where it came below our strike? It was worth 42 or 46. But look right here. Right here, it didn't even go down as far, and it was only worth 22 or 26. Why? Because we're closer to expiration, and the statement was false. So it wasn't worth as much. Okay, you follow me there? Let's look at another quick example here. So let's say that we're looking at euro dollar 25.40 strike, and it's below the market. So we sold it at 42. Okay, well, and it stayed below the market. So now 42 is going down to 32. Come down here, now it's down to 18. Because remember, when you sell, it's the other way. So when I'm selling for 42, the most I can make is what? $42, right? So I'm selling it for 42. Now it's worth 32. Now it's worth 18. So I'm I'm making money there because my statement is true. It's staying below the market. Look at the opposite. I'm saying it's going to be above 25.40. I'm buying. So I'm buying it right here for 56. Still staying above the market. Getting closer to expiration. Going up in value. Now it's 64.68. Closer to expiration. Staying above. 78.82. Bam. Expires in the money for 100. Okay. So we'll get into this a little more over the next few weeks, and there's tons of videos you can watch on the Apex site that will explain in the money, at the money, out of the money, and time to expiration, time decay, how binaries move the closer to expiration. Okay, but it's good for all kind of markets. All right, because like we just showed there, we just showed a market going up and down. Okay, so a choppy market. Let's just say right here, let's say you got in right here, and you bought right here for 38 bucks. Market pops up, 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 right here. Let's say you decided just to get out of it. Let's say you didn't even hold it to 100. You just wanted to get out of it right here. I bought it for 38. Market popped up. I sold it for 72. Okay, I made 34 bucks. Cool. Down here, I bought it for 26 bucks, and bam, it popped up and expired in the money. All right, they'll work in choppy markets or right here, even in flat markets. Okay, and that is the beauty and power of a binary. All right, it can work in any type of market. They're good for long or short directional trades, straddles, scalps, premium collections. We'll get into what all that means. Basically what a premium collection would mean is, here's an example. Say right here. All right, let's say I've got 15 minutes to expiration, and I think the market's going to stay above. Well, I'm going to buy it for 82. And just hold on to it for those last 15 minutes and get out of it, at 100 and make 18 bucks. I'm just going to collect that premium. Okay, that's an example of premium collection. Scalp. What is a scalp? Well, like I just showed you there. Hey, market's down here, but I think it's going to pop up before expiration. I'm going to buy it at 38. Gets up here. I'm just going to get out of it at 72. I scalped it and made 34 bucks real quick. Okay, cool. All kind of different strategies and systems there, and we'll get into some of that in some of our future webinars, or feel free to visit the site and watch plenty of videos about it. Okay, there's a ton of different strategies you can use with binary options, and again, we'll cover more, and you can watch as many hours of videos you want. We got vanilla options, news trades. We do a lot of news trades with binary and spreads through Nadex. Got vertical spreads, butterflies, straddles. Butterflies when you buy and sell a Nadex binary. Let me just kind of give you an example of that. Let's say that the market's right here. Let's say I sold one up here. So I'm saying it's not going to get this high. And let's say I bought one down here. And I'm saying it's not going to get this low. So basically what I'm saying is I'm going to sell one up here, buy one up here. The market's going to finish somewhere in the middle. That way I can make money on both of them. Okay? That's called a butterfly. We teach a lot of butterfly strategies, strangles, hedgings, using Nadex binaries and spreads, iron condors, a ton of different ways you can use binaries. We're going to get into a lot more of that over the next few weeks, and like I said, lots of information on the site. So make sure you go to nadex.com and sign up for your demo account so you can start playing with some of these. Visit us at apexinvesting.com to learn more about how to trade on Nadex. Let's look back here. I think we've got most of the questions answered, but let's take a peek here, see if I missed anything. Let's see here. How common is it for someone to trade a spread versus one-leg trades? Marcel, it's that just depends on you. That's a personal preference. It's all about what strategy or system you're using. Some people prefer to only trade directional. They just, they're directional trend traders. They like to go with the trend. They like to only be in one contract at a time. Some people love trading the butterflies, the both sides, where, something we talk a lot about here at Apex is, having more than one play in your book, or having more than one, you know, kind of golf club in your golf bag. Okay, having more than one tool to build your house. Market conditions change. One day the market may be choppy. One day it may be flat. One day it may be trending, and there's not one magical perfect system or strategy to always use. If you only ever do trend trading, well, then on flat and choppy days you're probably not going to have any trades. But, and that's one of the reasons at Apex we teach all different types of strategies to apply to the different market conditions, and how to use indicators to determine what type of market condition is happening that day. Is if it's a trending day, you may want to use a trending strategy and only go directionally with your binaries. If it's a flat ranging day, you might want to do a butterfly and take both sides, to where if it's a flat day like this, yeah, you can just hop in on one and let it go, or you might want to sell and buy, where you can make money on both sides. That's a personal preference and dependent on what strategy and system you use there. Okay. Let's see here. Order can be skipped this way. Let's see here. Fees. Fees are 90 cents each side. Okay. So if I'm buying a Nadex binary, it's a 90-cent fee. And then when I close that out and sell it, is a 90-cent fee. Okay. Now, if it expires in the money. Okay. So if I buy it, 90 cents. If I sell it and it's in the money and profitable, a 90-cent fee. But if I sell it and it's not, then there's no fee on that other side. Or if you do, that's per contract. You can do as many contracts as you want. Okay, but anything over 10 contracts is maxed out at $9 each side. All right, so it's 90 cents a contract, but if you did 20 contracts, it's still only going to be $9. Okay, so there is a cap there. Let's see. So that's the fees. Yes, if you go to apexinvesting.com, as far as where this webinar will be recorded, go to apexinvesting.com, sign up for a free account, just create a user and password. It'll get you a free account, and once you're on the site, just go right here to Questions tab, Trading Questions Forum. I'm getting a few more questions here for some latecomers of where this webinar will be posted. So Trading Questions Forum, and right here under Apex, under the General Forum, Apex Webinars, Newest Webinars. Alright, I should have that up later tonight, posted there. Okay, and you can go back and rewatch this video, watch over the PowerPoints and examples there. Okay, let's see here. Jo, are the charts? Yes, there are charts on the Nadex site that you can use. We don't use them ourselves so much. We use live data and through NinjaTrader. If you go to the website here, and under Education, right here, Getting Started and Set Up with Apex and Ninja. If you walk through there, we show you how you can get live futures and Forex data for free, and a Ninja trading platform, charting platform, which is what we use, all for free. Okay, it'll give you live data, give you nice charts, give you the ability to use the Apex indicators on the charts there. Okay, let's see here. Understand. I wonder about fill rates. Let's see here. Yeah, Ken. Yeah, I probably did just clarify that. I don't really have a. The question is, what is your personal favorite strategy and why? I guess the only thing I can say there is I personally love trading the 5-minute binaries. I mean, strategies in general, I don't have a favorite one because, like I said, it depends on the market. The market conditions determine, um, what strategy or system I'm going to use, whether it's trending or choppy. So I have to, um, determine my strategy or system based on the market conditions. But overall, if you're asking for my personal, I love trading the 5-minute binaries. Why? Because you can do them every 5 minutes. I don't have to wait hours for them to close, or a day, or a week. I can literally do them every 5 minutes, be in and out of trades. There's opportunity every 5 minutes on those 4 different FX pairs. Um, we have a lot of part-time traders and nighttime traders, and traders that have full-time jobs during the day, and they don't get off of work till 5 or 6 o'clock, and they got to go run errands and get the kids and family stuff and dinner, and they don't have hours and hours to trade. If they want to sit down at night to trade, um, they might not have hours to sit there and trade and watch and wait for a binary to expire hours later, but they can hop on and sit for 30 or 40 minutes and pop out, a good handful of 5-minute binary trades in just a very quick, short time. Um, so those are my favorite pairs. Okay. Doug, I can only do 5-minute FX pairs in the evening. No, the 5-minute binaries are 23 hours a day. They're closed from 5 p.m. until 6 p.m. Eastern time every day. Otherwise, you can trade them all day long on the 4FX pairs. You can trade them in the morning, afternoon, at night. They're just closed 5 to 6 p.m. Eastern time. Okay. Let's see here. Bear with me, guys. I'm just scrolling back through. There was a lot of questions. How do you reach the midpoint for see here. Load, you asked, why would I buy for 85 and only earn 15? Shouldn't I buy for less and earn more? Again, that's a personal preference. Yes, when you're buying for 85, you are technically risking $85 if you held on to it till expiration. Again, you can buy for 85, it can go against you, and you can get out early. Say you buy it for 85 and market's going against you, and it's down at 60 now, let me get out. Okay, and you lost 25 bucks. Yes, you can do that. But yeah, if you bought for 85, your max profit potential is 15. So is that a good risk reward ratio to risk $85 to only make 15? No, probably not. So if you're going for that strategy, you would not want to hold on to that binary and let it go all the way against you to zero. You wouldn't want to buy for 85 and risk the full 85 if you only got a potential of making 15. But why would you possibly want to do something that would cost you 70, 75 bucks, 80 bucks? Well, if you're buying for that high, that means that it's already in the money, right? Like right here. Why would I buy this for 82 when I can only make 18? Well, if I've only got a few minutes to go and the statement's already true, it's already correct, I can buy it for 82 and I can make 18 bucks of profit and collect that premium because the market's already above the strike price. So if I buy in right here, the market can go up and I still win. The market can stay flat where it's at and I still win. Or it can go down as long as it doesn't go all the way down to here. Okay? So that is some of the reasons why someone would possibly want to do that strategy, is when I'm buying for that higher dollar amount, it normally means I have a higher percentage of probability of it expiring in the money. Okay? So again, it's just different strategies and risk rewards there. Let's see here. I think I got most of the questions. Let's just look here. If there's anything I missed, guys, go ahead and pop it in there and let me know. I'm just going back through. Do you have any advice or tips on trading the 5-minute binaries? Go to the Apex website and check out the where's it at here? Under this Binary Essentials, and check out the trading system courses, 5-minute binary trend catcher course. All right, Henry, that's the one. It'll walk you through it step by step. That's the one. That's definitely the one to check out there. Marcel, understanding, is there a risk of not getting filled if you trade spreads instead of single legs? I think what you're talking about is the difference of trading a single leg compared to a butterfly. What you have to realize what you're doing there is you're trading two separate contracts. Okay. I mean, do you have a risk of not getting filled? Well, I mean, it depends on what you do. I mean, example of a butterfly, real quick here. Tomorrow, let's just look at the ES. Okay, and guys, this is I'm not recommending a trade here. I'm just showing you what is a butterfly. All right, right now the market's at 21.13. So right here, 21.12. That's at the money. Okay, so the strike is about the same price as the market. But what is this? 21.21. I can sell this one for $18. Okay, so let's say I sold this one for $18. What I'm saying is the market's down here. I'm saying the market's not going to get up here. Right? So if I'm correct, then my profit potential is $18.75. Right? So I'm saying the market's here. By tomorrow at close, it's not going to get up here. But I'm also saying, all right, down here, I can buy this one for 82. So what I'm doing is I'm buying this one for 82, saying, all right, the market's going to stay above 2106. So right now it's at 2112. So I'm saying it's going to stay above 2106, but also stay below 2121. You follow me? So I'm saying that it's going to stay in between these two. So I'm going to buy and sell. Okay? And if I were going to do that, I would just go in and just say I'm going to sell that one, and this is a demo account, again, just not recommending this trade, just saying, and I would place the order and get filled, and then I'm going to buy this one and place the order and get filled. Well, gotta buy it. Okay, so now I have two orders on. I have a buy and a sell. So I'm selling up here, buying down here, saying it's going to close in the middle. So both will be true, is what I'm going for there. Okay? All right, guys. I've kept you a little longer here. I think I've got most of the questions answered here. Where did we skip to? See here, Bob. I'm not sure exactly what you're asking. Is it quoted, assuming the calm trending conditions, quoted just above and below as price goes by? How can orders be trusted to understand orders correctly? Bob, I'm not sure what your question there is as far as your order being skipped over and calm. Not quite sure what you're asking there, but tell you what, hop over to the Apex website and shoot a help desk ticket over into me. I check those and see if you can get a little more detailed for me there, and maybe give me an example. I can direct you to a couple of videos there to watch, and maybe even some live trade videos, and see if maybe there's something you may not be entering properly on the order there. See if we can clarify for you. Okay, I'm just not quite sure what you're asking there. So okay, guys, I sure appreciate your time. We'll get this webinar posted up for you. Join us next week. We'll be talking about some binary strategies and misconceptions next week on Monday, and join us on apexinvesting.com for hundreds of hours of videos that you can watch and get more education from there. Okay, I'm going to go ahead and shut it down for the night, guys. I appreciate it, and I'll try to get this uploaded for you later this evening, and have a good one. Thank you, Rob.